Good morning. Good morning. It's 8:02 a.m. Chicago time and 9:02 Eastern U.S. time on Thursday, the 18th of May, 2017. Am I really loud? I feel like I am. Thanks for joining me today for another Trader Bite. We're embarking on the day after a big drop and sell-off, which is pretty exciting given what we've had to deal with here for the last 6 weeks. Let's get going. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. The overall market stance this morning is risk off, continues starting yesterday, or Sunday night's Globex session, based on this Trump impeachment or investigation news. And that same stance carried over into the Asian session and the European session. And what we have today is the Euro Bund at the top of the chart, up 77 ticks, 0.48%, followed by the yen, followed by the dollar, followed by the U.S. Treasury bond, followed by the 10-year. Those are all safety assets. Gold is almost unchanged, just trading down 40 cents, which gold has had its move yesterday, but has not done anything overnight, which is kind of interesting. Crude oil is lagging. I want to remind everyone, I did send a notice out for those who are part of the FT71 underscore alerts Twitter account for SMS alerts. I did send a message out saying that crude has rolled to the July 2017 contract. The symbol for that is CLN7 or CLN17 on most feeds. So we're trading at 48.84 in crude, down 57 cents or 1.13%. That is the laggard today, followed by the Euro stocks, DAX, and then the U.S. indices. So overall, crude is having a gap down and is trading the crude is trading the scene of the crime from the inventories release yesterday. The inventories release came in at 48.86 in the July contract, and we're trading at 48.88. It hit the mid of the gap 2 days ago. Very technical trade in crude, pretty cool. Also resistance yesterday and the day before, right at the MC point of control. Anyway, those are all auction terms. I'll show you the chart for that so you know what the heck I'm talking about. As far as news, nothing has changed really. The global sell-off is continuing. Again, the S&P 500 closed down 1.7%. The Nikkei off 1.3. The FTSE off 1.3 as well. The U.S. 10-year is at its April lows. The yield is at its April lows at 2.19%. Also, the Fed rate hike odds have fallen from 100% in June, which was 100% about a week ago, to 82.5%. And that's about it. The British pound, the other one is the British pound. It just got over 1.3 to the U.S. dollar. Remember, the British pound got pounded, no pun intended, back during the Brexit vote, and has lost a lot of its value, and it's making its way back. I think it was around 150 or so when that happened. And there you have the overall news. There's a lot going on with the U.S. political system. Unfortunately, it's a circus, and it's certainly injecting some volatility into the market. Initial jobless claims came in just a half hour ago, 232,000, much better than 240,000 expected. Continuing claims also slightly better, 1.9 million versus 1.95 million. Looking ahead at what we're expecting today, we're getting, we also had, we are expected to have the Philly Fed, although I don't see that in my news feed. I thought we had Philly Fed today. Ahead, we have the U.S. leading index At 10 a.m. Eastern for April, expecting zero point 0.4. We get natural gas inventories for those who are trading the NG contract. At 10:30, expecting 60. We had a slew of speakers overnight in Eastern time. At 3 a.m., we had Weidemann 350. We had the ECB speaker Mersch. At 8:30 this morning, Eastern, we had ECB speaker Mersch. At 8:45, we had Lautenschlager. And at 8:50, we had Nowotny. At 1 o'clock today, we get Draghi. We get Draghi in Tel Aviv. And then at 1:15, we get Fed Speaker Mester. So ahead of us, we have a 1 o'clock and a 1:15 as far as speakers are concerned. I don't see Mnuchin. Oh, yeah, Mnuchin at 10 a.m. Mnuchin gives the congressional testimony, not expected to be a mover. Let's switch gears here and look at what we expected yesterday versus what we got. Yesterday we had a gap down, and the expectation was for the market to get responsive, for the news to be overpriced in the Globex session, and for it to return back into balance at the MC point of control 2385. So the main move was expected to be up yesterday. Did not happen. Okay, that did not work. So that's our first plan. The second plan, again, looking more for an open test drive or an open drive up, given the size of the gap, but there was a very low expectation of a gap close for it to trade all the way up to around 23.98. The probabilities for that were somewhere around 7%. Anyway, the idea here is that we get a quick move back into 2385, get some resistance there, get a turn, and then continue higher and work our way through the gap zone above from late April. That did not work either. That plan did not show itself, so it could not be traded. And then the tertiary plan was a quick push up to balance the book. Remember, the overnight inventory was short, was strong short. We were looking for a rebalance on the open, but we were looking for a drive down. And the idea behind Hypo 3 is to continue to drive lower. The key target that it would hit on the drive down would be 2370. 2370. Here's what we got. There's your initial response. It looked like an open rejection reverse. A push up, we put in, it wasn't quite a drive. We had an OS low and an OS high. It put in an OS high at 8150, pushed to 2393.75, and then it just rolled right over, and started to make its way down towards the 2370. 2370.50 was hit to the tick here for a nice 5-point rotation. That was the initial opportunity for me. Do not overstay. Do not overstay the long on a push on a market that is not able to close the gap and is pushing down. Then we get a second opportunity here at the mid. This was a fairly clean trade here, and then the market continues lower and starts to move towards the next major MC point of control. So if I turn on the flex levels, you'll see there's the next balance area, the point of control of it's at 2356 and a quarter, 2356 and a quarter. And we got down into 2354.75 and balanced. And what we were left with yesterday, again, we're in the gap zone of the 24th. And what we're left with yesterday is this weak bottom. In a conversation yesterday afternoon in the close, someone asked what is expected overnight, what is most likely to happen overnight, and my answer was a potential test at 23. It's either going to find its footing and it's likely to push lower, but once it finds its footing, I was looking for 2366 and a quarter. How do I come up with that? It is the LVN, the first LVN on the way up, right, on the profile. But how was that LVN formed? We don't want to take levels just blindly. How was that LVN formed? If you follow along, you'll find where that number comes from right there. 2366 and a quarter. Break, pull. So we have the mid test. We have a breakthrough. We have a pull, push, and I was looking for a pullback to that. If it had any buying interest, it would have a higher low above the 67.75, and it would start working itself back to 72.50. So I was expecting to come in this morning on the buy side and find the high day at either 66.50. It went to 67.50, pushed by 4 ticks, or 72.50 on the downside. I did not have a target for the downside and continuation on that week low, but the primary target below is 2347.50, and we pushed through to 2344.50. Okay, and so on a statistical basis, we are reaching the 1.92% drop from the open. 1.92% drop from the open from the weekly close. Actually, this is incorrect. I need to adjust this. It should be the statistics based on the open. I mistakenly put it on here on the close. I need to scratch that out of my notes here. It's not a relevant number. The weekly open, the weekly open this week is actually much lower at 2378.50. So we still have a fair amount of room to the downside for the rest of the week. It is Thursday though, and so we're running out of time. Look at these gap zones. The gray areas that you see on these flex levels are all gap zones. We have been just gapping all over the place. I did not remove the 425 gap zone because we did break through it. We rushed through it. Um, and then we tested it from below, held, and continued. I do need to go back in and remove this level. It has been tested from below. It's no longer valid, and then we established a 40 tick or 10-point gap zone. There are 10 points between the 2393, the 2393.75 low of Tuesday and the high put in yesterday at 2383.75. That's a 10-point gap that we have above us, and there's a fair amount of change that's going on. Let's take a look at a bigger picture. I know this is a little bit longer than we'd like it to be. Um, Here it is. We balanced for the first 2 weeks of the month, actually the last week of April, the first week of May, and then we started to shift the point of control upward, right? So we're making our way through all-time highs, and then yesterday we exploded to the downside and have taken back a lot of range. And are starting to move our way back into the bigger balances. And so what we see here is a market that is very highly compressed at the top here, and it's released its energy to the downside, and now it's got a lot of work to do to regain that, for the buyers to regain that. There's a lot of resistance on the way up. Wow, these look, because we've been here for so long, these charts look so cluttered, and it is because there's so much work that is incomplete, that has been incomplete for a long time. And so the next area down is 2347. 2347, and we are trading at 2353 on the edge of the gap zone that was left behind on the 24th of April. I expect the market to stabilize today, assuming there's no further news. There's new news. You know, a new FBI, or a former FBI director was appointed as a special investigator on the Trump affair. There's news on Pence, Mike Pence, who's the VP, who would be the next to take control. Beyond that, I'm sure news is going to come out on Paul Ryan, the Speaker of the House, who would be the next in the succession, the constitutional succession in the U.S. It's just a big political theater, and the market is beholden to it. You know, all those plans for tax cuts and stimulation and a huge infrastructure plan that was priced in from the time of the election going forward. a lot of that confidence is waning, and we're seeing that as risk, and the market prices risk to the downside. Let's look at let's look at what our plans are for today. This morning, I expect auction, an open auction out of range. I'm expecting the market to make an open auction out of range. I expect the market to make an attempt, potentially push through to 2357.50, and I'm looking for responsive sellers or initiative sellers to start pushing towards 4750. I'm looking for the overnight low to be taken. I'm looking for balance. I'm looking for the market to balance today and hold steady as the primary hypothesis. So things are going to look rushed on the open. Uh, Things are going to look rushed on the open, but I expect the market to stabilize in this area between 44 and 50 or so this morning. So that's the primary hypothesis. The secondary hypothesis is an immediate push down and then responsive buying, which will likely take us back to the 60 area and then eventually push through and start working itself back up into the 70, and that would be the key target this morning. Okay, there are other hypotheses which include continued trend down again. Again, this is based on the political news that is flowing out. And I just keep my ear very focused on my news feeds. But overall, I do not expect the market to continue running, although the market it has taken a pretty good run up. But I expect that some of that energy is coming off and the market to stabilize. If there's further news to price in, it is likely to balance, continue to regain some of the energy, and then release it to the downside. If you look at your chart here, the volume that went off on the closing bar yesterday, the cash close was approximately 3 times what the 20-day average is for that 15-minute bar. This is the bar that goes from 3:45 p.m. to 4 p.m. The volume was 3 times as much, and it was actually to the buy side, even though the bar closed lower. That volume went off to the buy side quite a bit, and so there's some interesting stuff, some positions that were taken, potentially hedges or whatever at the end of the day. But I expect, again, that's another clue that there's a strong potential here that it's likely to stabilize. Okay, so that's where we are. I want to remind you that today at 4:30 Eastern, I'm doing a webinar with Futures IO talking about record keeping and the importance of tracking trader performance. It's a key part of keeping deliberate with your improvement as a trader today and in 20 years of trading. It's the same. You need to keep track of what your performance is and keep pushing the ante and being deliberate about your practice every single day. Okay. Good luck. Again, this is not a political forum. I'm speaking about what's in the news. You could take your political discussion elsewhere. I'm not interested in it. It just causes people to fight, and it's really irrelevant to what we're doing on a day-to-day basis. But keep an eye on the news. It doesn't mean you should have an opinion on it. Just trade what you see, not what you think you want to see. Good luck.